Hi guys, my name is Ryan, the Frugal Analyst, and every year I always try to max out my IRA contributions, and there's always an option to put money into either a traditional IRA or a Roth IRA. In this video, I will explain the main factors between choosing to contribute to a traditional IRA versus a Roth IRA, and that is taxes. The whole goal of these accounts is the pursuit of getting taxed once. When is the question, because we want to get taxed at the lowest rate possible. And I will go over the two main factors in choosing, which is one, the changes in future income, and two, the maximum contribution limits. Let me first give a quick background on how a regular investment account is taxed versus a Roth IRA and a traditional IRA. So let's start with our assumptions. The first one is we want to invest $5,000 of our gross income before tax to an investment account. The current tax rate is 20% and the future tax rate is also 20%. And the investment return, let's say, is 5% per year for the next 10 years. So starting with the investment account, your $5,000 in gross income is going to be taxed immediately, and you're left with only $4,000 in investable amount. Then your 5% gain per year is subject to tax. Now, I'm going to assume 20%, but that tax rate can differ based on long-term gains, short-term gains, dividends, interest income. So the tax rules are complicated, but in any case, whatever you gain is going to be taxed again. And at 4% per year, you're going to have a total gain of 48%, and the total profit would be $1,900. Now, for traditional IRA, your gross income is not going to be taxed yet. So you start with $5,000 in investable amount, and we're assuming a 5% return per year, and that return is not taxed. So 5% per year, multiply that for 10 years, you're basically getting a gain of around 63%. Now, when you take out your money, you are going to be taxed. And if the tax rate is the same, assuming the same 20%, you're going to get a gain of around $2,500. Now, for the Roth IRA, you're going to get taxed at the year that you're getting that gross income. So your $5,000, similar to a regular investment account, you're going to have $4,000 in investable amount. Now, your 5% return per year is not taxed, so your total gain is the same like a traditional IRA, which is 63%. Now, when you're withdrawing a Roth IRA account, there is no tax because you already paid the tax once when you deposit the money into the Roth IRA. So your total gain, again, is $2,500. So for traditional IRA versus Roth IRA, if the tax rate right now and in the future is the same, you're actually going to make the same amount of money. Now, both traditional and Roth IRA perform a lot better than an investment account because you're only going to get taxed once, and that's shown in the stars here in the chart. So now comes the question, should we put our pre-tax dollars into the IRA, which is a traditional IRA, or should we put our post-tax dollars into our investment account, which is the Roth IRA? So the biggest factor is the change in future income. We basically get taxed based on the income brackets, and if we make too much money, we'll have to pay more taxes. So the question is, in the future, in the retirement age, is your retirement income going to be higher than our current income? And if so, you want to get taxed now and you want to use a Roth IRA. Now, if you think that you're going to make a lot less money in the retirement age compared to now, you want to use a traditional IRA so you can postpone your taxes until you're in retirement age. Now, if you chose a traditional IRA and you have some years where your income is lower than you typically have and wanted to convert it to Roth, it is possible, and you can convert a traditional IRA to a Roth IRA without any penalty. You're just going to have to pay the tax once. The second factor is maxing out your contribution. So every year the IRS publish how much money you can put in the IRA, and between Roth and traditional it's always the same amount, and for 2020 it's around $6,000. And this number can be higher if you're older, or it could be lower if you make a lot of money. So let's say your maximum contribution amount is $6,000. For traditional IRA, you can put in $6,000 of your gross income. Now, if you put in the same $6,000 into a Roth IRA, you're actually putting in $7,500 of your gross income to the IRA. So this is important. If you want to put in as much money as you want, we have to look at it in terms of gross income, and Roth IRA will allow you to deposit more pre-tax dollars. So those two are the biggest factor, which is change in future income and the maximum contribution amount. Now, there are other considerations. For traditional IRA, when you're around 70 years old, there is this thing called required minimum distributions, which means that the government just want you to pull money out of your traditional IRA. And when this happens, if you have too much money in your traditional IRA, which is a good problem to have, then you could be taxed at a higher rate. So if you have like millions and millions of dollars, maybe you got lucky, maybe you invested a bunch in Bitcoin in your traditional IRA, then you're gonna have to pay tax for it at some point. And if your balance is too high, you might be taxed at a higher rate. For Roth IRA, there is this huge benefit of being able to pull the principal of your investment without a penalty before you're 60 years old. So this can come in handy if you need emergency money and the only money you have is tied in a Roth IRA. Now, as far as what I am doing personally with my money, I'm putting a lot of money into Roth IRA because one, I can put more money into a Roth IRA than a traditional IRA, and two, I expect that my retirement income would be higher than what I'm making right now because there could be inflation, and I also have decades of work ahead of me. So that's it for this video. I hope this information helps you decide between putting money into a Roth IRA or a traditional IRA. No matter what you choose, you're gonna make better returns than a traditional investment account. So I would recommend maxing out your IRA contribution every single year. So thanks for watching. Please comment and hit the like button if you find this content helpful, and subscribe for more frugal videos. I'll see you next time.